And we are live. Good evening, everyone. Tonight, I want to talk to you about how Terra USD lost its peg to $1 and also just talk to you about the overall market conditions. I've been on the record now for the past 2 months where I've been telling you guys that I believe that Bitcoin's going to test $30,000, going back to the previous low that we had made a couple of months ago. And what we're going to start to see in these markets is many of these, algorithmic stable coins, these DeFi protocols get a stress test to see if they're truly robust and they can actually handle a lot of the selling pressure and the interconnectedness of crypto. Now, I've been on a record where I've stated that Binance and Tether are criminal organizations and enterprises, and that I believe that Tether is going to be the reason why the market actually tanks. Now, Terra USD is different from Tether, right? I know they seem similar. You have UST and you have USDT. What you guys have to understand is that many of these stable coins are not fully backed. So when you look at Tether, right, for every Tether in circulation, there needs to be a dollar sitting in the bank somewhere. And for years, I've been saying that the Tether is just not fully backed. Well, when they finally went through an audit and they opened up their books, we now know that Tether isn't fully backed. Now, what other people are trying to do to create a different version or a more dynamic version of a stable coin is having an algorithmic, backed stable coin where it's pegged to, different oracles that are pinging different data points in order for them to be pegged at a dollar. Now, UST works a little bit differently where everything is tied into the Anchor protocol. And basically what it's trying to do is incentivize you to swap your Luna for the actual Luna token for UST, right? And basically they work in inverse of each other, right? So if you're minting more UST, you're then burning Luna tokens, right? So effectively, when you buy that UST and then you stake it inside of the Anchor protocol, you're locking up the actual stablecoin, which is then putting deflationary pressure on the Luna token, which is going to push the price up, right? Because if you're minting UST and you're burning the Luna token, there's less in supply. But then what starts to happen is that if a lot of people at one time start to sell or swap that UST for Luna, then you start minting a lot of new Luna tokens, which puts a lot of sell pressure on the actual Luna token. So there's definitely a lot of Ponzi-like economics built into many of these DeFi protocols. Because when you ask yourself a very simple question, where does the 20% come from in regards to the Anchor protocol? That tells you all you need to know. And what happened is that so many people, were going out here and talking about how you can buy a house or you can take a loan out against your home and use the 20% that you're earning to pay down that loan. It was just so many different crazy things that you've seen people out here doing. And that just tells you that a lot of people don't know, what they're talking about or what they're doing. And this becomes the problem where you have people who claim to be crypto experts and know what they're talking about, and they absolutely don't. And if you think like I'm just a person who's sitting up here and just trying to, sell you stuff, you can go back here a year ago where I was talking about Tether. And I've been telling you guys for the longest that Tether is going to take down this market. Now, what happens when the stable coin started to lose its peg and drop as low as 61 cents, right? Remember, a stable coin is supposed to be pegged 1-for-1 to a dollar. Janet Yellen immediately came out and stated that we need stablecoin regulation. And I told you guys, if you go back and watch the videos I did where I was talking about Tether, I said to you, many of these schemes are going to force regulators to have to get involved. So whether it's Shiba Inu, whether it's Dogecoin, or these meme coins, whether it's some of these rug pulls and NFTs, you're going to start to see now the regulators want to come in and regulate a lot of the behavior and stuff that's going on inside of, crypto right now. Now, to make matters worse, what they tried to do in regards to, Luna, is they wanted to shore up UST. They went out and purchased Bitcoin out of all assets, right? But the problem, what many of you don't understand, is that number one, they purchased Bitcoin at the top of the market, right? At 40,000, I think above 40,000, they purchased Bitcoin. And then now they're being forced to have to sell that Bitcoin or borrow against that Bitcoin and use it as collateral to try to defend the peg. So effectively, they basically purchased at a higher price, and now they're being forced to have to liquidate and sell that asset or give it to market makers to try to defend the peg. All while we're having these macro events happen where the Fed's trying to fight inflation, the Fed's raising interest rates, which is putting selling pressure on Bitcoin as well. And then you have people like Michael Saylor that's heavily levered in regards to Bitcoin. And I believe that there's a rumor floating around out here that at around $21,000, he would get a margin call. So what's going to start to happen is many of these people are going to have to shore up a lot of these different DeFi protocols, their positions. And I believe that we're probably going to go a little bit lower than $30,000. I can see us trading down potentially somewhere to about $24,000, maybe even $22,000, just because we haven't seen enough panic in the market. Now, another thing that's ironic and funny about this, and we're going to get into this later, is I keep telling you that everything on the blockchain can be tracked, traced, and monitored. And when you have people like Don Quao or Du Quao, Quan, however you say his name, I'm just going to call him Du, right? Because I'm horrible at, pronouncing Asian names. When you have individuals where they're basically the brainchild of something, that's centralization at its core, right? Because you're depending on one guy's brain to power an entire ecosystem for a cryptocurrency. And see, this is exactly why Satoshi stepped away from Bitcoin. Because if Bitcoin was going to thrive, it was going to take a community of people coming together to improve the protocol. You should not have one individual out here putting together solutions to try to solve a problem, going out here and trying to buy Bitcoin. Because at that case, then how do we know that he's not the individual attacking the token himself? And these are questions that you have to ask yourself. Now, going back to my point about everything being tracked, traced, and monitored, it's really interesting how the attacker really attacked this particular protocol, because you basically told the world that you're buying Bitcoin and how much Bitcoin you were buying, right? So if you're buying $3.5 billion worth of Bitcoin, I mean, it may sound like a lot, but it's really not a lot of Bitcoin in the grand scheme of things. And you open yourself up to, bigger pockets than you, that's going to try to break you and test your strategy. And that's what we're watching happen right now. Now, again, you have to be mindful of these things when you are investing. And this is why I always emphasize and stress to you, know what you own and why you own it. And if you're going to put some money into these riskier protocols further down, the top 100, then you need to understand that it needs to be a small, insignificant amount of your portfolio. So in the event if you take an L, you're not taking a catastrophic loss. So please do me a favor and like this video, share this video, subscribe, make sure that you hit the notification bell and you set it to all, because YouTube does not send out my notifications. Also, in the description below, I have my Instagram page. You feel free to follow me if you want to do so, and reach out to me via DM if you have any questions. Also, I am the founder and creator of My Tech Academy. We cover all things crypto: how to buy, how to sell, how to store your crypto, NFTs, how to buy, how to sell NFTs, how to create NFTs, different DeFi protocols. And most importantly, we have a community where we're sharing a lot of these threads that we're going to cover today, so that you can kind of stay in the know as to the important things happening in crypto, so you know what you own and why you own it. Also, we have a lifetime membership. The first masterclass for lifetime members was about how to convert your crypto into alternative assets and converting those assets into fiat without having to go through a centralized exchange such as Coinbase. That's already done for lifetime members. The next masterclass is going to be on how to track whale wallets. And we're going to get into the importance of that because, see, what happened was whales were tracking what the LFG was doing, right? The Luna Foundation Guard, in regards to trying to shore up their treasury, and was able to front run them and basically test their strategy. So learning how to track whale wallets is going to be extremely important to predict, who's over leveraged, who's under leveraged, who's exposed in the market, what protocols are getting ready to pump or dump. And again, we have a free 3-day trial at My Tech Academy if you just want to try it out and see if you like it. A link will be in the description below. Also, I am giving away $5,000 worth of cryptocurrency. Yes, you heard me correctly. I'm giving away $5,000 worth of crypto. All you have to do in order for you to learn more about this is simply text the word YouTube to the number in the description below, and then you'll be on my text message list so that when I'm going live, when I'm posting on Instagram, I'll send out a text message. And also in the future, I'll be alerting you as to when I'm doing the giveaway. If you can hear me clearly and see me clearly, type 1 in the chat and we can get started. There we go. And I see a donation. Thank you for that, XLRG. Let me read what you just stated. Right here it says regulations is coming. They were basically counterfeiting USD. I wouldn't say counterfeiting it in regards to counter. I would just basically say that they were running more of a complex Ponzi scheme. So you can look at it as counterfeiting USD. I would just look at it as more just as a Ponzi scheme. So it's illegal at the end of the day what they're doing in regards to, you're basically trying to get people to lock up their token so that you can burn more Luna and then dump it at higher prices that kind of keep feeding the 20% APR. So let's get to what Janet Yellen had to say real quick. Let's go here.
I'm grateful for your point. I hope you will agree to work with me and my colleagues who are interested in getting something done. Do you think we could shoot for a goal of getting legislation done this year?
I think it would be highly appropriate. The outstanding stock of stablecoins is growing at a very rapid rate, and we really need a consistent federal framework. I really look forward to working with you and members of Congress to devise legislation that would accomplish that.
Great. I'm grateful for your point. I hope you will agree to work with me and my colleagues who are interested in getting something done. Do you think we could shoot for a goal of getting legislation done this year?
I think it would be highly appropriate. The outstanding stock of stablecoins is growing at a very rapid rate, and we really need a consistent federal framework. I really look forward to working with you and members of Congress to.
So as I said before, when you go here, again, just saying for you again, I made a video talking about Tether over a year ago. I made another video previously to that video about a year prior to that. So for the past 2 years, I've been telling you that Tether is a risk to the market, and that as regulators come in and get involved and they really start digging in the books, you're going to see that Tether is not fully backed. Now, again, UST is separate in a different stablecoin to USDT, but it's the same concept in regards to many of these stablecoins. They are trying to shore themselves up. Like it's basically akin to you're flying a plane and you're trying to change the engine of the plane mid-flight. And that's what's happening with Tether and UST, where they're trying to shore up their treasury or their reserves by, trying to buy commercial paper or trying to buy other cryptocurrencies, but in the meantime, they're printing, right, or creating more tokens out of thin air. And that becomes extremely problematic, because then what starts to happen is that, these stable coins start to get pegged to other stable coins, or they're locked up inside of DeFi vaults. So now you have to start asking yourself, what happens in regards to liquidations, what happens in regards to other protocols that may have UST or USDT inside of their vaults, right? This becomes extremely problematic, and for us to be so Web3 and different from the traditional banking system. What we're starting to see is the same contagion and risk spread that took down the housing market and then the stock market and then the economy in 2008 is basically coming into crypto right now, right? And I think that it's, you know, it's very important that when you are investing your money into things that you look at both sides. See, so many people come onto my page and they call me a hater. They say that I'm jealous, that I just want to attack other projects because I'm not making any money, yet I have multiple 10Xs under my belt, right? And I tend to put my money into solid projects that I believe they have legitimate, legitimate technologies, legitimate protocols, legitimate teams. When you see these protocols paying 20%, 12%, 30%, in most cases, what they're doing is they're really just paying you in inflation, right? Or they're printing tokens out of thin air. And what happens is that most of the money, most of the whales, they're really just moving from one Ethereum killer to the next. So this week is Avalanche, next week it's Polkadot, then it's Moonbeam, then it's Solana, then it's Harmony, right? Or then it's whatever protocol that's being built or dApp that's being built, and they're basically paying out inflation. Now, again, you can make a lot of money if you understand the musical chairs and you know how to track the whale wallets. But for many of you, you don't. Now, here's the funny thing. This video is from May 13th, 2020, where Nevin Freeman was actually asking questions and talking about algorithmic stablecoins, right? So this is almost 2 years ago that someone was talking about this. And see, this is the problem with crypto. Whether it's BitConnect, right, which is a Ponzi scheme, or many of these other Ponzi schemes, a Ponzi scheme can go on for a very, very long time. And a lot of people can make money. In most cases, it's whales. But when it finally falls out, most people will lose money, because what ends up happening is that you don't get out in enough time. So let's listen to what he had to say, and then we'll get into some more information.
Biggest risk, the thing that could go really massively awry with stablecoins that could be terrible for the crypto world overall, is if there's an algorithmic stablecoin that has no backing, that just has a sort of algorithmic mechanism that's meant to keep it stable, which we tried really hard to figure out one that would work in it.
Stable relative to?
Whatever their oracles are pinging the price of. It could be the dollar or the euro or gold or what have you. But there's a category called algorithmic stablecoins. I would put Terra and Celo in this category. There are a number of others. Basis was like this and they never launched. The thing that could happen is one of those could launch and be marketed very effectively and be significantly adopted. It could even happen in a market where people really, really need a stable currency and don't have one, and that's why it gets massively adopted. People who are not crypto speculators, people who just want to preserve their savings. If that protocol then blows up economically and falls apart, and the price of that goes down half or close to zero, regulatory backlash. Imagine if we were sitting here today talking about how great our stablecoins were, where it had already been the case that like $1 billion stablecoin had collapsed and lots of innocent people had lost their money. It would be a very different situation. And that really could happen. There are economic experiments being run with some stablecoins that I believe personally could go that direction. And so I think the worst thing that could happen is if one of those gets really big before it fails.
Yeah, it's like they hard code economic theory into a thing, let it go, and it runs, and then...
And to be clear, Nubits and BitUSD, like BitShares, are both like some form of algorithmic stablecoins that have collapsed. Like the peg has broken. It's just that it was a tiny number of people in crypto using them, right? But we have these bigger projects who are marketing to huge numbers of normal consumers. And so I think there's a real risk, a real thing to be worried about there.
I believe there is no way to launch uncollateralized algorithmic stablecoin.
It's happening. It's already happened.
Yes, but there is no way to get adoption. Why people will use that?
Terra will tell you that like hundreds of thousands of people in Korea are using it to like pay for like the most popular thing is diapers on an e-commerce website because they have like partnerships with people and they're offering massive discounts.
And make a diet, people are using
like Ponzi schemes.
I don't want to use that term. I don't want to use that term. But
so, and it's important that he talked about Ponzi schemes. Right now, someone just left a comment where they said crypto is dead. Crypto is absolutely not dead, right? And we have to stop being reactionary all the time. Like, oh my God, Bitcoin's going to $1 million. Oh my God, it's going to zero. There are tiers and there are levels to this. There are quality projects with real teams, with real technology, solving real problems. And then you have people who are gaming the dummies. The problem is that there are a lot of dummies. And what happens is, and this is why it frustrates me, because I'll sit here for 2 hours and I'll talk to you and I'll educate you about crypto. And then a dummy like this will come around right here where he's going to tell you how you can retire with only $500,000. And morons like this is the problem with crypto. Because what happens is, because many of you are in economic conditions where you're desperate for money, you will listen to dumb shit like this and you'll go put your money into stuff like this, listening to a guy who clearly is not going to talk to you about the risk. So let's listen to what he has to say. And this is the problem.
You probably want to retire while you're young. Here's how you can do it with only 500K. So I want you to go to Google and type in Anchor Protocol and click on this little guy. Now once you're here, go up to the top right and click on the web app. You'll come over to this page, which is pretty much the dashboard. The next step is to connect a crypto wallet that has 500K in it. If you don't know how to add crypto to a wallet, just search it up on YouTube. Next step, come over here and click on to earn, where you'll see this page. However much crypto you deposit in here, you'll be making over 19% a year. So if you invested 500K, you'll be making 97 grand a year. Keep in mind, you're doing absolutely freaking nothing. Tell me that's not a good deal. Come on, tell me that's not a good deal. So you probably want to retire while you're young. Here's how you can do it with only 500K. So I want you to go to Google and type in Anchor Protocol and click on this little guy. Now once you're here, go up to the top right and click on the web app. You'll come over to this page, which is pretty much the dashboard. The next step is to connect a crypto wallet that has 500K in it. If you don't know how to add crypto to a wallet, just search it up on YouTube. Next step, come over here and click on to earn, where you'll see this page. However much crypto you deposit in here, you'll be making over 19% a year. So if you invested 500K, you'll be making 97 grand a year. Keep in mind, you're doing absolutely freaking nothing. Tell me that's not a good deal. Come on.
So let me give you some game, because you know I'm all about giving you guys education so that you can make good financial decisions. If you hear synthwave goose in the background, chances are turn the shit off. It's garbage. It's not good information. If a person is trying to give you financial advice in 60-second reels, 30-second reels, turn them off. If a person tells you how freaking easy is that, walk away. If a person goes, oh man, all you got to do is this, turn them off. Because investing requires and involves risk. Just like there's reward, there's risk. If a person tells you you don't got to do freaking nothing, turn them off. And this is why we have to get to a point where we stop looking for a free lunch. This is why things like Terra can even happen. And don't worry, we'll get into what happened with Terra later on. But it's important to understand the problem and how Terra can even attract so much capital in the first place. Again, there's nothing wrong with Terra in regards to speculating, if you know what you're speculating in. I had money in Terra. Nothing, nowhere near how much money I have in Chainlink, or how much money I have in Polkadot, or how much money I have in ETH, right? It was a very insignificant portion of my portfolio. And I was able to take profit as it was running up. Why? Because I understand the way that the tokenomics works with the particular protocol. You need to make sure you're doing the same thing. Now, again, let's go back and listen to some more of the stuff that he's getting, some more of the information that he was giving out. Here he goes again.
About to buy $1 million home for half the price. The thing is, you can only do this if you know how to utilize cryptocurrency. So this is the house that I'm gonna buy, and it costs about 1.4 million. So I'll have to pay around 7 grand a month. But for this entire house, the total that I need to pay is 740K. It's because of crypto. For the down payment, I'll have to pay about 20%, which is 290K. With the remaining 450K, I'm going to put that into the Anchor protocol. Once I deposit the 450K, it'll yield me 19% per year. That's 88 grand a year. Now divide that by 12 months, and that's going to make me 7.3K a month, just enough to cover the monthly cost of this mansion. After it's paid off, I'll have a $1.4 million home, plus be making 7.3K a month doing nothing. If you want to learn more about crypto, check out my bio. About to buy $1 million home for half the price. The thing is, you can only do this if you know how to utilize cryptocurrency. So this is the house that I'm gonna buy, and it costs about 1.4 million. So I'll have to pay around 7 grand a month. But for this entire house, the total that I need to pay is 740K. And it's because of crypto. For the down payment, I'll have to pay about 20%, which is 290K. With the remaining 450K, I'm going to put that into the Anchor protocol. Once I deposit the 450K, it'll yield me 19% per year. That's 88 grand a year. Now divide that by 12 months, and that's going to make me 7.3K a month, just enough to cover the monthly cost of this mansion. After it's paid off, I'll have a $1.4 million home, plus be making 7.3K a month doing nothing. If you want to learn more about crypto, check out my bio.
And again, red flag, red flag, red flag, doing absolutely nothing. Makes it sound so easy. See, in a bull market, everyone looks like a genius. Everyone can sit up here and tell you about this coin and that coin and what this is going to do. How many people are actually telling you that Bitcoin was going to go to 30K? Outside of people like Richard Hart, I only think I was the only other person. Even when we were pushing up at 40,000, I was telling you we have to go back down to 30K. Just understanding that there's a lot of dumb money out here, stupid money like this, and things like meme stocks and PFPs. You know, you have some profile picture NFTs selling for 100 ETH. It's like, it's insane. It doesn't make any sense, right? So clearly what has to happen, and when you understand that projects like Terra, projects like, you know, Shiba Inu and Dogecoin, they are sucking liquidity from quality like Chainlink, like Bitcoin, like Ethereum, right? And this is what you have to understand. We have to flush out these stupid projects to get people to start investing in more quality projects. Now, the next thing I want to touch on is I just saw a comment come in here, and I have to respond to this because this is important. So you have Bomac Extra BBQ sauce. Right? So pretty much, you know, sounds like a troll to me. The Fed controls Bitcoin, and it's becoming more obvious. The manipulation from a technical analysis standpoint is so telling. Understand that Bitcoin is a protocol. It is technology, right? It's important. This is my iPhone. My iPhone will work whether or not Apple stock is up or down. The Bitcoin protocol will perform the same way that it's supposed to perform, whether Bitcoin is at $100 or $100,000. The price of an asset does not determine its functionality. And this becomes the problem with many of you because you don't understand what you're buying. You don't understand how the technology works. All you care about is if the price goes up. If the price goes up, it's better than Ethereum. It's better than Bitcoin. The price goes down. All of this is a scam. See, it's amazing to me how just people, how price drives your mentality in regards to what's valuable, what's not. Bitcoin is a protocol, has rules, right? Just like when you work at a job, you have a uniform, you have rules. The Bitcoin protocol will perform the way that it's supposed to perform, whether the price is up or down. The Fed has no control over the Bitcoin protocol whatsoever. Now, can the price be manipulated? Absolutely. The price of anything can be manipulated. This is why you don't want all of this complexity being built into crypto with many of these DeFi protocols. Because what starts to happen now is that people, go and try to lock up their treasury or shore up their treasury by using Bitcoin as an asset and then trying to go and borrow against it or being forced to have to buy it at 40K and then sell it lower while the whole market is pushing lower. So again, the Fed has no control over the Bitcoin protocol. In regards to price and macro conditions, listen, the Bitcoin protocol is a Bitcoin protocol. Nothing's changed about Bitcoin last week, last month, or last quarter. Whereas with Netflix, the Netflix business model has been completely broken, right? That's a broken stock. Bitcoin has not been exploited. There's nothing wrong with Bitcoin. What's happening right now is interest rates are going up, meaning liquidity is being taken out of the marketplace. If liquidity and the price of money and leverage is being reduced, then what happens is people begin to start to sell assets and raise cash. What you have to understand is that you are looking to invest over the long term. You're not looking to make 20% and do absolutely nothing, right? You're looking to take your time and invest in quality projects. I hope that answers your question. Now, Jeepman says, thoughts on Aave being down 58% from highs. How important do you think DeFi finance will be in the future if mass regulations around the corner? Thinking of picking up a small bag. I like Aave. I think Aave is a solid project. I own a good amount of Aave. In regards to DeFi regulation, it's going to come. I think that it would be better for you to ask me this question later on once I finish everything up. But by far, Aave is one of the quality projects within the Ethereum ecosystem. And I kind of look at it as being like a bank in regards to the fact that you can borrow, you can lend your crypto there, borrow against your crypto, lend out crypto there, do flash loans. So I definitely see a marketplace for it. I see the need for it. And I think that the concept of over-collateralized loans, meaning that you have to have more collateral within their ecosystem in order for you to be able to borrow out stablecoins, makes sense to me. So hope that answers your question right there. So let me get back to what I was saying here. Now, this is a good thread on exactly what's going on. But I want to go here real quick, right? Because this becomes extremely problematic, right? So this is Stablecoin, right? And he's the master of the stablecoin. I want you to look at some of the things that he's tweeting right now. Getting close, stay strong, lunatics. Close to announcing a recovery plan for UST. Hang tight. Didn't mean to be so quiet. Needed razor focus to deliver. Thanks everyone for the support. Deploying more capital. Steady, lads. Haters will criticize this for centralization, and they're right for now. LFG reserve made UST more robust, but also temporarily more centralized. What have I been talking about time and time again? Many of the things that are pretending to be Web3 are really Web2. You know, many of these DeFi protocols that are pretending to be different than traditional finance are just like traditional finance. And we're starting to see this now because now whenever it's tested and try to get battle tested, we start to see you need a centralized mind in order to come up with a plan. Then it's not really robust because what's stopping the government from shutting him down? See, the whole idea of something being decentralized is that it should be able to withstand a government attack in regards to the protocol being able to operate, right? Like, it is extremely hard for you to be able to attack the Bitcoin protocol. It's not hard to attack Luna or attack Terra, and we're seeing it right now. And you're going to start to see many of these other DeFi protocols get tested in the same way because they're not robust and they're not anti-fragile. So this is a great thread by Mouse. And I would encourage a lot of you guys to get involved in communities where they're sharing threads like this and updating you on what's going on, or get involved in crypto Twitter. I know many of you don't have all day long to sit on Twitter and research and read this. You know what I'm saying? I'll use things like Nansen, you know what I'm saying, or Glassnode to track the blockchain. I'm a nerd like that, so I do it all day. But I know many of you don't have the time to do this. So definitely try to plug into communities like My Tech Academy, or even in crypto Twitter if you're looking for a free option. So UST collapse is the biggest threat to crypto right now. It has massive ramifications across the entire industry. Is this the end of UST and Luna, or simply a blip on the radar? A thread on the UST DPEG and what it means for crypto. 2. UST has officially lost its $1 peg. It's been a day of drama. UST hitting a low of 61 cents before bouncing back to the 90-cent region. The entire crypto industry is glued to the charts as it sends shockwaves through the entire industry. To understand why a DPEG is possible, let's explore the different types of stablecoins. UST is a decentralized algorithmic stablecoin. Algorithmic means backed by an algorithm, not assets. Fiat backed by tangible assets like BUSD. Algorithmic stablecoins like UST are valuable because they are scalable, ideal for facilitating DeFi, decentralized, improved capital efficiency. Unfortunately, this also creates risk, which can result in depegging. Now, this is not the first time that UST has depegged as well. It happened before as well. So UST stabilizes its peg by allowing you to redeem 1 UST for $1 worth of Luna, or 1 Luna for its equivalent value in UST. To incentivize ARBs, UST must possess true utility. What's its main utility? Anchor protocol. The 19.5% yield on Anchor incentivized large amounts of liquidity, and it's currently responsible for 51.8% of UST's circulating supply. So follow me here. Effectively, the main utility for the Terra USD stablecoin is to park it inside of Anchor protocol to earn the 19%. So this is what's creating value for it, because what people effectively are doing is that they're buying Luna and then swapping their Luna for UST and then parking the UST into Anchor protocol to earn the 19%. So now, the way that the token works is that when you are minting new UST or you're swapping into UST, you're basically burning Luna. So again, crypto is all about supply and demand, right? So if you can create tokenomics where you're burning a token, therefore there's less in supply. So what happens? It pushes the price of Luna up, right? Because everyone wants to get the UST to park it in Anchor, because everyone wants to make the 20% with Anchor. But then, see, and this is the problem when you have a centralized coin like this. As Luna's going higher, the people who that's running the actual Anchor protocol, UST, and the Luna protocol, they're selling it at the highs to shore up to be able to pay you the 20%. Think about this for a second, right? So they're getting you to lock up your funds in Anchor to earn the 20%, and then they're selling at the highs to be able to pay you that 20%. So effectively what they need is they need new money constantly coming in to keep pushing the price higher so that they can effectively do what? Dump it, pay you the 20%, but they're cashing out as well. That's effectively what's happening. That's a Ponzi scheme. Because in order for the Ponzi scheme to keep moving forward, you need new money coming in. There's no real business happening, right? In regards to, like, where is the 20% coming from? Is it coming from actual, like, a bot? Is it coming from real trading? Or is it coming from getting you to lock up the token, to burn one token, to push it higher so that they can dump on you? Eventually, it falls apart. And this is what you see with most of these DeFi protocols. And they try to make it seem like, oh my God, it's so complex, it's so new, it's so revolutionary, and it's not. Now, again, it can make for some strong pumps because, again, everyone wants that 20%. But eventually, you run out of new money, and that becomes the biggest problem. So, it says, however, Anchor's dominance over UST is also an issue, as it has lost 57.8% of its total value this week. UST leaves Anchor, swap for other assets, sell pressure on UST. Because again, remember, now, when you start losing the peg, right? Because remember, things work in inverse. So before I was telling you that when you're minting new UST, you're burning Luna. The problem is that when you actually start selling that UST and going back into Luna, now you start minting more Luna, right? Before you're burning it when you go from Luna to UST into Anchor, but now when you come out of Anchor into UST back to Luna, now you start minting more Luna. So what starts to happen? You have more tokens now in circulation, which does what? Pushes price down of the Luna token. So it becomes a seesaw going back and forth. Unfortunately, this has a major issue for Luna. When UST is minted, the equivalent dollar value of Luna is burnt. Great for Luna as it reduces the total supply, but it also works the opposite way. When UST supply reduces, Luna is minted. If more Luna are minted, this increases the total supply, resulting in more tokens entering the market. We can see the total supply change is plus 25.3 million in the last 24 hours. Just one day has wiped out over a month worth of supply burn. So again, you're slowly going up. You're burning. Everything's going great. You're making your 19%. Everything's fine. As soon as some sell pressure comes into the market, some panic comes into market, all of that Luna that was burned comes right back onto the marketplace in a matter of 24 hours. It's insane. As you can imagine, this is bad for the Luna price as more tokens are now circulating. As a result, Luna has dropped 64% in 4 days. But even a 24 million increase in supply isn't enough to warrant a 64% correction. However, emotions rule crypto. FUD and panic are usually stronger forces than any tangible baseline metric, at least in the short term. Remember that crypto is a highly inefficient market, and this is exactly what happened to UST. Coordinated attack with the sole purpose of destroying the peg. $285 million dumped on Curve by one party. FUD starts spreading on Twitter. People panic out of UST. Shorters get aggressive. Liquidation cascade. Don't be fooled. There are big players that made obscene amounts of money from this sell event, likely at your expense. There are also whales that are making millions riding the ARB on the way up. This is a true war of bulls versus bears. Now let's stop right here. Because see, this goes back to what I was saying about Tether. When you go back and you look at the fact that Tether was never fully backed, we know that now. It's no longer speculation. When I look back at 2018, I always said to myself, why did the market crash? I always said to myself, could it be that Tether and Bitfinex, again, just me putting my conspiracy theory hat on, because they weren't fully collateralized and backed, because Bitfinex was hacked and they had to fill that gap, could it be that Tether crashed the market to make up for the capital shortfall that they had? I believe so. I believe that they purposely crashed the market from 20K down to 3K to make up for that capital shortfall. And now when we're looking at Luna and we're looking at Terra and we're looking at the problems that they're having, could it be that they're working in unison with some larger players to purposely drive this market down to buy back in? Because if you think that the price of crypto can't be manipulated, you're sadly mistaken. You're sadly mistaken, right? And when I put my thinking caps on, right, and I just look at the way things are playing itself out, you know, I would not be surprised if this is not some inside baseball going on for them to shore up their treasury in some type of way, or for this to be some type of an exit scam or exit scheme, right? And you know what I'm saying, this is just me using, you know, my common sense. I've been involved in crypto for what? I've been involved since late 2012. Nothing surprises me, and I would not be surprised if you don't see some type of inside baseball going on here. Now, I am not one to call for regulation. I understand that, you know, idiots have to be punished, right? If you believe that there's a free lunch, you deserve to have your lunch stolen from you. That's just my mentality. But again, I understand why some of you would want regulation, but I'm not for regulation because I don't believe that regulation fixes these problems. I believe that regulation actually causes more problems and creates more insiders who are protected now by the rule of law. So now he says, but Terra Foundation had a plan for this. Over the last few months, they have been buying Bitcoin to use as a monetary reserve. They bought almost $2 billion worth of BTC. Why? To protect the peg during times of extreme stress like we're seeing now. As you can imagine, this isn't good for Bitcoin, as LFG could sell Bitcoin in order to get UST back to its peg. And again, you know, for a person like, you know, the guy Do Kwon, Dao Kwon, however you say his name, for him to be such a genius and a bright mind, why would you announce to the market that you're buying $3.5 billion worth of Bitcoin, pump the price up to 40K, just to turn around and have to sell it now down here at 30K, right? It doesn't make any sense just in regards to, even if you think that he's a bright mind or a genius mind, right? Because effectively you're taking a loss on the Bitcoin that you purchased, right? And no matter how they try to go here and make it seem like, you know, oh, well, they're doing a collateralized loan, where they're basically selling their Bitcoin, right? So it says the market clearly hasn't responded well to this, even though $2 billion is small in the scheme of Bitcoin, $600 billion market cap. It isn't enough. It still is enough to induce panic. Remember, a major catalyst for Bitcoin's last run was stablecoin buying, So it makes sense that it works in reverse. And as I said before, I don't think that this individual is that dumb to buy Bitcoin at 40K and then turn around and dump it. I believe that this is a coordinated attack of them working together. Again, this is just my hunch. I don't have any proof of this, but it's just my hunch that they're working together with big players on Wall Street to basically play both sides of the market, right? And one thing you can learn about this is that, this right here is George Soros, right? And this is how George Soros broke a European country, right? He broke the sterling, I believe it was. George Soros is notorious for taking both sides of a trade. So how to make greater than $800 million in crypto attacking the once third largest stablecoin, Soros style. Everyone is talking about the UST attack right now, including Janet Yellen, but no one is talking about how much money the attacker made or how brilliant it was. Let's dig in. Our story starts in late March when the Luna Foundation Guard, that's LFG, starts buying Bitcoin to help back UST. LFG started accumulating Bitcoin on 3/22 and by March 26 had a $1 billion plus Bitcoin position. This is the number one leg that made this trade or attack brilliant. Now follow me here. Again, as I said earlier, where I gave you the analogy, you have to think of this as you have a plane in the air, and in the middle of the air, you are trying to, because remember, the UST stablecoins out here now, people are staking and they're trying to earn that 20% or that 19% inside of the Anchor protocol. So now at the last minute, you get the bright idea, oh shit, we have to figure out a way to shore this up. So now to shore up our peg in the event that it's attacked, shouldn't you have done this prior to launching the stablecoin? Not while it's already out here, because you don't know if the $3 billion is going to be enough to shore up the peg and keep it pegged to $1. But this becomes the problem with many of these DeFi protocols where they market themselves as being better than Ethereum, cheaper than Ethereum, more scalable than Ethereum, DeFi 2.0, DeFi 3.0, and then you realize that many of them have not even perfected what they are truly trying to do, but you call them an Ethereum killer. Then you turn around and you have Solana every other week. Whenever Solana, remember, they were supposed to be able to do 400,000 transactions per second. And then soon as the blockchain starts to ramp up, soon as they get a little bit of congestion, boom, then they can't sync up the blocks. The nodes are not in unison with each other. And then what they have to do, they stop producing blocks, right? And we watch this. Stop allowing people to sell you things that are not factually or technically true, right? Stop being so greedy, because that's what a lot of this boils down to, is that you are allowing people to sell you things that are factually not true, right? And it's the same thing happened with Dogecoin. The same thing happened with Shiba Inu and Kishu and all of these other different garbage meme coins and these so-called Ethereum killers. They're not killing anything. The only thing they're killing is your pocket at the end of the day. So now, this Bitcoin position was tracked, traced, and monitored. And I guarantee you, some bright minds on Wall Street was looking at this and they was rubbing their hands like Birdman, because they just knew $3 billion is not enough, especially when you have derivatives and synthetic products that you can lever up and go against Bitcoin with, right? So it says the second leg comes in the form of the 4-pool Frax announcement for UST on April 1st. This added the second leg needed to help execute the strategy in a capital efficient way. Liquidity will be lower, and then the attack is on. And then right here it says, we don't know when the attacker borrowed 100,000 Bitcoin to start the position, other than that it was sold into Quan's buying. Still speculation. LFG bought 15,000 Bitcoin between March 27th and April 11th. So let's just take the average price between these dates of $42,000. And see, here's the beautiful thing. Remember, I keep telling you guys, everything can be tracked on the blockchain. So if you know how to track whale wallets, if you know how to track flows into exchanges and out of exchanges, you know when whales are accumulating or when whales are looking to dump or when they're looking to go start a short position. And again, I will be having a crypto masterclass on this right here, talking to you about how to spot whale wallets and how to track whale wallets. And that'll only be for lifetime members. So it says, right here it says, so you have a $4.2 billion short position built. Over the same time, the attacker builds $1 billion over the counter position in UST. The stage is now set to create a run on the bank and get paid on your Bitcoin short. In anticipation of the forepool, LFG initially removes $150 million from three pool liquidity. Again, you can start to see these things and track these things across the blockchain. And this is what's so cool and just so gangster about this, is that they know that they have a $3 billion position and they go and take out a $4.2 billion position. Very, 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 very clever. Right? So basically they're betting against what, LFG basically did, because they knew that it wouldn't be enough in the event if they really put pressure or some selling pressure on that actual UST stablecoin. The liquidity was pulled on 5/8, and the attacker uses $350 million of UST to drain the curve liquidity, and LFG pulls another $100 million. So $350 million of UST to drain curve liquidity, and LFG pulls another $100 million of liquidity. But this only starts the depegging down to 97 cents at the lows. LFG begins selling Bitcoin to defend the peg, causing downward pressure on BTC while the run on UST was just getting started. So understand here, what they're doing is they have a short position against Bitcoin because they know that in the event, if they start to attack the actual peg, then Do Kwon or Stablecoin is going to have to try to sell that Bitcoin, which is going to put more selling pressure on Bitcoin, which for the short attacker, he's going to make a killing on the short of the Bitcoin and then be able to push more pressure of the actual stablecoin down. And then the attacker can ride the stablecoin back up. Just very brilliant, man, just to watch it unfold. With the curve liquidity drained, the attacker uses the remainder of their $1 billion over-the-counter UST position, $650 million or so, to start offloading on Binance. As withdrawals from Anchor turned from concern into panic, this caused a real depeg as people fled for the exits. So LFG is selling Bitcoin to restore the peg, while the attacker is selling UST on Binance. Eventually, the chain gets congested and centralized exchanges suspend withdrawals of UST, fueling the bank run panic. UST starts to depeg to 60 cents at the bottom while Bitcoin bleeds out. The crypto community panics as they wonder how much Bitcoin will be sold to keep the peg. There are liquidations across the board, and Luna pukes because of its redemption mechanism. The attacker very well could have shorted Luna as well. BTC fell 25% from 42K on 4/11 to $31,000. So how much did the attacker make? There aren't details on where they covered, obviously, but if they were able to cover or buy back into the entire position at 32K, that means that they made $952 million on the short. That's powerful. That's just powerful to watch that. Like, whoever orchestrated that, you can tell that they're really, really savvy. And this is what makes me think that this had to be, inside, like, to me personally, this has to be inside ball, because clearly they had to know that they were going to start draining the liquidity to try to go and fight and uphold the peg and put more selling pressure on Bitcoin, which is why the short paid off so well. Which is why, I tell you guys to just always make sure that if you don't know where the actual the APR is coming from in some of these protocols, or how the protocol works on a deep level, stay away from some of this stuff. Because what we're starting to see here is that some really, really sophisticated and smart people are getting involved in this, and they're going to run circles around you. This is why I try to tell you guys, stay with some of the top projects, stay with the Chainlink, stay with the Polkadot, stay with the Cosmos, stake your coins with the within the actual protocol. Try not to get too fancy with this DeFi stuff, because, yes, you can make 55% and 40%, if you're like rehypothecating and you're trying to roll this stuff over. But at the end of the day, if you don't really know what you're doing, stay away from some of this stuff. Now, as I said earlier, with this happening and, starting to play itself out with what's going on here, I believe that they try to get up to 91 cents and it's starting to trade back lower. We'll check the charts in a little while, but what we're going to see is something like this happen in some other protocols, and this is going to be the excuse that people like Janet Yellen and Jerome Powell are going to use to come in here and regulate stablecoins. And regulation's definitely coming, right? It's just it's something that has to come, and it's going to be interesting to watch and see how crypto performs and holds up with a lot of these regulations that will come out. And this is why I believe that we are not done yet, right? Because we know for a fact, I want to keep going back to this video I did before. We know that Tether isn't fully backed. And it's rumored that a lot of the commercial paper that's backing Tether is actually Evergrande paper or, Chinese commercialized debt in regards to like real estate, Chinese commercial real estate backing a lot of the, the Tether reserves. And that's going to be very, very problematic. And I would definitely tell you guys to, be very, very careful with, holding a large amount of your money in stable coins like Tether. If I'm looking at a stable coin, I like USDC. I think that that's a good stable coin. I know the Paxos coin is decent, but I would be very, very careful with some of these other stable coins in regards to whether or not they actually have the liquidity backing them. And right on cue, I played this earlier. I want to play it again because you know that the government is sitting here and they've already been talking about regulating stable coins for a while now. And this is what Janet Yellen had to say.
Devised legislation that would accomplish that.
Great. I'm grateful for your point. I hope you will agree to work with me and my colleagues who are interested in getting something done. Do you think we could shoot for a goal of getting legislation done this year?
I think it would be highly appropriate. The outstanding stock of stablecoins is growing at a very rapid rate, and we really need a consistent federal framework. I really look forward to working with you and members of Congress to devise legislation that would accomplish that.
Great. I'm great.
I would be extremely careful with DAI. I'm not saying that DAI is as much of a risk as UST is or USDT, but you have to understand that there are, DAI is made up of, a blend of a lot of other stable coins and assets. So I would be very, very careful with DAI as well. I would definitely say that if you want to be safe, it's better to go with USDC, although it is centralized. You have to worry about them being able to, seize your assets or turn off your wallet. But, I like USDC in comparison to many of these other coins and Paxos as well. So look what this person says, Swirl Society. I love these names, right? These names are amazing. I warned you last week what happened to Common Sense. FedCoin would take over and crypto is going to crash. You didn't warn me of anything because I've been talking about the fact that Bitcoin's going down to $30,000. But the beautiful thing about you, Swirl Society, is I didn't see or hear you when Bitcoin went from 3,000 to 20,000, went from 20,000 to 40,000, when Ethereum went from $100 to $4,000. I didn't see you nor hear you talking about anything. Like, notice that you can always tell us when it's going to crash, but people like Swirl Society can never tell us when the market's going to rally, right? It's amazing how these people, they pop up out of the blue whenever the market's down, but they're very, very quiet when the market's rallying and ripping higher. So you just have to watch out for people like this, right? Because, these people at the end of the day, they're just trolls, right? What we're doing here is we're investing in technology that's going to dominate the fourth industrial revolution. And part of that is not letting people like Swirl Society shake you out. Could you imagine if you sold, quality stocks like Apple and, Amazon and Google in 2004, 5, and 7, and 8, you would look like a fool, right? Now, if you're a trader, that's different. If you're a person that's trading in and out, then you don't really care the direction of the market. But if you are an investor, then you understand the quality and buying and holding quality assets. and understanding that over time the charts go from left to right, and owning quality is what's going to really help you build wealth. There's nothing wrong with having multiple different portfolios for different things, having a momentum trading based portfolio, a long-term investing, buying, hold portfolio, and even a DeFi portfolio if that's what you want to do. But just it's important to know what you own and why you own it, right? And understand that when the macro conditions change, that you have to be able to change your valuations as well, right? So like a lot of these cryptocurrencies that we were thinking were going to get, $100 billion market cap, I don't see that happening in the current macroeconomic environment. That doesn't mean that over the next 2 years that won't change, because remember, the Fed, tomorrow we have inflation data coming out, right? And depending on that data is going to determine, what the Fed does going forward. I still believe that we're going to have probably 2 more rate hikes of 50 basis points. I believe that the stock market's probably going to trade about 10 to 15% lower. I can see Bitcoin trading down to about $24,000, even $22,000. And that will really put a lot of panic in people before you start to see the market then start to stabilize, move sideways for a few months. And I can see us going into August, September, the market starting to rally and push higher. Why? Because midterm elections will be getting ready to come up. Obviously, Joe Biden wants to make it seem like he's fighting inflation. He's serious about the economy. The Fed is heavily, politicized. So I see the Fed, definitely, they lean left in regards to their politics. They want to see the Democrats sweep in the midterm elections. So I can see them falling back from raising rates and the market pressing higher going into the holiday season. And then I believe the real crash is going to happen going into the first quarter of next year, is when you're going to really see everything really start to bottom out, because that's when the supply chain issues will definitely be here. Inflation will probably be rearing its head back up higher, and that's when we'll have that problem. But stay away from people like this, right? I want to play this right here. These TikTokers and people on Instagram who, they come in and tell you how easy it is to trade, how easy it is to invest. Be careful of those individuals. It takes time to really get a good rhythm to this stuff. Most likely you're better off just buying and holding quality assets. And be very, very, very careful with your blue chip crypto, because what you don't want to do is find yourself in a situation where you are, trading your blue chip crypto for things like Shiba, Dogecoin, or putting it into things like Luna and losing a large amount of your crypto.
Tell me that's not a good... So you probably want to retire while you're young. Here's how you can do it with only 500K. So I want you to go to Google and type in Anchor Protocol and click on this little guy. Now once you're here, go up to the top right and click on the web app. You'll come over to this page, which is pretty much the dashboard. The next step is to connect a crypto wallet that has 500K in it. If you don't know how to add crypto to a wallet, just search it up on YouTube. Next step, come over here and click on to earn, where you'll see this page. However much crypto you deposit in here, you'll be making over 19% a year. So if you invested 500K, you'll be making 97 grand a year. Keep in mind, you're doing absolutely freaking nothing. Tell me that's not a good deal. Come on, tell me that's not a good deal. So you probably want to retire.
Right. Again, be very mindful of people who speak like this. Even people, when you hear them say like, oh, I made $300,000 on Shiba. How much money did they put into it? When people talk about they made, $300,000 on Dogecoin, right? Like, how many of you actually have, $500,000 just sitting around to just put in a play protocol like this? Like, you see, this is irresponsible and dangerous to the highest degree, because it's giving you a false sense of security, when in reality, it's not that easy and it's not that simple, right? Because number one, you're not liquid like that. And number two, could you afford to take a $500,000 hit or $200,000 hit? So really take your time and educate yourself in regards to just what you're investing in. And again, I'm going to plug my course and plug the information that I have, because in my Tech Academy, we have a DeFi course talking about a lot of this stuff and getting you guys to understand that, you don't have to go into a lot of this risky stuff to make decent yield. You just don't. So look what Swirl Society says. I have over 1.9 million liquid in real estate investments. How can crypto or stocks match that? That's just foolish. Like I just want you to think about that. How crypto can match that. Let's just pull up a chart, and you know, like you would look kind of stupid. Because if you come here to Trading View and we go here to, can't log into my main account, but if we come over here and we pull up and we launch a chart, come over here, can't log into my main account. You know what? Let me see something. Give me 1 second, guys. I want to see if I can log into my main account. I reset my computer, so let's see if I have it saved in my keychain. Sign out, and then I want to sign in. Yeah, okay. So I'm in my main account, and what I want to do is put on my basic Ichimoku cloud, just so we can have a better understanding. There we go. So Swirl Society, because I know you're trolling, right? So if we come here, if you were investing in crypto here at $250, this is a chart of Ethereum. And Ethereum went from here all the way up to where it's currently at right now. You're looking at 10 times on your money. You're not making 10 times on your money in any real estate deal. Crypto gives you extreme if you're actually averaging into your position, knowing what you own and why you own it. Not only do you get capital appreciation, but you can actually stake your crypto within the protocol and earn passive income. Currently, right now, I believe that Ethereum is paying around 8% per year. So good luck with this idea that you think real estate is superior to crypto. And you don't have to deal with any of the overhead that you have to deal with when you're actually own real estate in regards to repairing your property, vacancies, dealing with the headache of tenants, etc. So I would prefer, me personally, to own crypto and just stake it any day over owning real estate. Let's pull this over here. And the idea, like, you're liquid, like you can't be liquid in real estate. That doesn't even make any sense, right? Like, real estate's hard to move. So this idea, like, oh, I'm just liquid, $1.9 million, like, no, it doesn't work that way. It takes time to sell property. AB says people are getting lucky on random pump and dumps. It's crazy. Yeah, but most people lose money in pump and dumps, and I think many of you miss that aspect of it, right? Everyone, see, one thing about the financial media and CNBC, they do a really, really good job of highlighting the guy who buys Dogecoin at 3 cents and becomes a millionaire, or buys it at a half a penny. But they don't talk about all of the dead bodies that purchased at 65 cents and 60 cents and 50 cents, and those people are getting burned. They don't talk to you about those individuals. Do you follow Ampleforth? I see a lot of arbitrage opportunity with that. May explore in the future. No, I don't follow Ampleforth. I don't know much about Ampleforth. You guys, you hear me talk about the coins that I'm interested in, right? So a lot of times, right, you hear me talk about what I'm interested in: Polkadot, Harmony, Avalanche. So sometimes, like, when you guys are asking me questions about like coins, it's like, I get that you guys want my opinion about stuff, but maybe you may be wasting your money because, you're asking me about things that I don't really talk about, and I don't have no desire to look into. I tend to I tend to focus on, and I think that a lot of you would do yourself a lot of justice if you focused on one or two ecosystems, right? Like Harmony is a layer one, and then focus on all of the applications being built on top of Harmony. Focus on Avalanche, and then focus on all of the applications being built on Avalanche. I'll focus on Ethereum, and then focus on everything in that ecosystem. I think many of you get yourself in trouble because, you're looking at, 13, 14 different cryptocurrencies, and you only have less than $20,000 invested. You're spreading yourself too thin to really be able to do the proper research needed, right? To really stay on top of what you're putting your money into. And I think that that's really very, very key here. Jeep man, you can look into some urn vaults. I just bit my tongue. You can look into some urn vaults. I haven't checked in a while, so I'm throwing 8% off the top of my head. I remember Lido was 6.4%. So I'm sure if you look around, it's I think it's between like 5% and 8% for staking your ETH. Bolmac Extra BBQ Sauce says, do you believe the CPI numbers tomorrow will be a major ripple effect? I think tomorrow's number, I think is going to be high. And I believe that the market's probably going to sell off because of the numbers high in anticipation that the Fed's going to keep, continue on this course. Right? If you just look at Ethereum here, and this is why I believe that we're going to come back down in here in this area right here. Remember, I'm not big on technical analysis, but one thing I know about markets is everyone else is watching it, right? And what I believe is going to happen is we're definitely going to drop this level here and push down to 1,700. Shit, we might even go as low as $1,000 Ethereum. Because what's going to happen is that because there's a lot of leverage right now in these markets, a lot of people will have to get liquidated. So I believe that we definitely are going to head lower, which is why my strategy, what I'm focusing on doing right now, is raising as much cash as possible. So for those of you who have been looking to invest with me, I told you guys to make sure that you DM me or you email me at info@mytechacademy.io. I sent you over the details. I'm looking to heavily get into looking to stake cryptocurrencies such as Pocket Network, Harmony. I'm building out a whole server farm to be able to literally, you can come and stake your coins with me. I'm also getting heavily into liquidating DeFi vaults. And just like literally, I have so much, information like that I'll be sharing with you guys in the future in regards to things that I'm getting involved in. Also looking at purchasing NFTs, because I believe that the NFT market has not experienced a massive bear market yet. Remember, the NFT market does not trade off of fundamentals at all. It's all speculation, right? So many of these premium NFT projects are probably going to trade much lower, probably 50%, 60% below its floor. So you're going to be able to scoop up some quality NFT projects and be able to tokenize them and fractionalize them. LA Ramon, I like what you just said. I'm into Harmony heavy. Yeah, I like the Harmony blockchain and what they're trying to do. And I like the whole concept of Pocket Network. And right now, these assets have been severely beat down. So to run a Pocket node, you only need 15,000 tokens, right? So it's going to be, easy to acquire that and set up nodes. Like I said, this is how you survive bear markets, right? You survive bear markets by being able to earn passive income. So right here, here's Terra USD. Look at this. It's losing this peg now. It's at 83 cents. Holy shit. No, Todd, I haven't had a chance to look at Constellation DAG yet. I love what Any Day Now just said, man. He stated, I just lost you where you go that quick. People talk about Cadena how it's going to kill Ethereum, but they never even have seen the thing perform yet. And look what just happened with Luna. You know, like this Ethereum killer thing is foolish. It is Ethereum's game to lose. Period. ETH2 doesn't perform. They have the network effect, right? At the end of the day, they have all of the liquidity and the network effect. At the either they have the tooling, they have the developers. Either Ethereum's going to win or they're going to lose. But it's their game to lose. Another blockchain's not going to kill Ethereum. Ethereum will kill itself if it happens. Guys, people keep talking about post-chain. Okay. What makes post-chain different from Avalanche? What makes it different from Harmony? What makes it different from Near Protocol, Cosmos? What do they have to offer that's so unique, so groundbreaking, so revolutionary? See, this is what happens is that Richard is a phenomenal communicator. So he sits there, he talks very, very calm. He reassures you that everything is going to go great. And you go, see, look, because Hex did well. Yeah, when something starts with no market cap, right, and people put money into it, if you're one of the people who get in early, you tend to do well. Right? That's a no-brainer, right? Like if I purchased Ethereum back like when I got involved, guess what? I did really well. That's great, right? So you guess what? If you get into Pulse and it goes from having no market cap or $100 million market cap and it's worth $20 billion, many of you are going to do well financially. That doesn't mean it's better than Ethereum. And see, this becomes the problem, right? So many people, they equate how much money they made with something being better than something else, right? So if I put my money in Luna and I turn $10,000 into $1 million, it's better than Ethereum, right? And that's just not the way that you should be valuing whether a protocol is better than another one, right? But again, this is how people think. They go, well, I took $100 and I turned it into $30K in Hex, so Hex is better than everything. I mean, if that's your barometer, then that's cool, right? Right? Like to me, I don't measure technology and how it performs based upon how much money I make. Mike Brown says, I didn't think Luna was supposed to be an ETH killer. Listen, man, you'll see some strange things on Twitter, man. Phantom was supposed to be an ETH killer. Listen, I've been hearing about these things all day long. This person says, I'll publicly kiss your feet if Pulse Chain doesn't do a 5,000x. Okay, that just because something does a 5,000x, right? Oh, like, look at Shiba Inu. People who got into Shiba early did extremely well. I saw one wallet that was worth $1 billion. That doesn't mean that Shiba Inu is quality technology. That doesn't mean that it's going to stick around and be like. I like the way that we perceive value is amazing to me. I'm heavily involved in Phantom. I use Phantom to test out a lot of my DeFi strategies. Taking a beating in Phantom right now, but I definitely have a good position in Phantom. And the market overall is still down. Mhm. Mhm. Yeah, Mike Brown. But again, it's not that I don't think that any of these things are Ethereum killers. And any from Avalanche to Solana, I don't think any of them are. John P. I've been told you guys I was taking profit at $20 with ApeCoin. So I told you guys I was been going to take profit, and that becomes another problem too. Is that you hear me mention a coin, right? And you go, "Oh my God, I want to buy that coin." The problem is I'm buying the coin at $7 and $6 and $8. You're buying the coin at $22, right? You're buying a coin after it's up 200%, 232%. So clearly you're getting in at a different price point. So your strategy has to be different in regards to how you're going to manage your position, right? And this becomes, very, very problematic, right? Like, and like I see people, they buy into things and they don't know what they own and they don't know why they own it, but they just buy it. And then they get upset, right? Like that they didn't make the kind of money you made, or that it didn't perform the way that it performed for you. And it's like, you have to know what you own and why you own it, not what I own and why I own it. And this comes back to, this is why you need to get education. This is why I created my tech academy. I created communities. Zero Cool is amazing. He's the admin of our group. He is amazing when it comes to calling out entries and exits, targets. That is his thing. This is why you need to be plugging in and asking questions and really diving deep into the information so that you can make quality decisions. Mm. Mm. Mhm. Mhm. Morgan Maniac says Ethereum is Ethereum killer. Yeah, because what we're going to do is Solana's the solution, right? We know Solana's going to solve the problem, right? Right? Because these other blockchains, they really got it down pat, right? They tell you that they're faster, they're cheaper than Ethereum, and then we find out that they're not faster or cheaper than Ethereum. They can't even keep their network up. But yeah, they're going to kill Ethereum, all right? I've been hearing it for a lot. I've been hearing about these Ethereum killers now for 4 years. Haven't seen it happen yet. Mm-hmm. 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 100% Eddie Sports Bro says, Eli, most people care about their bags pumping than the technology, bro. That's common sense, which is why their bags never pump. Right? This is why most of you who only care about your bags pumping, you tend to buy into things after they've already pumped, because you're not doing your due diligence. You're not tracking the blockchain. You're not tracking whale wallets. You're just going and you're saying, hey, I heard this guy talk about it. I'm buying it. BitBoy Crypto mentioned it. I'm buying it. Ivan on Tech spoke about it. I'm buying it. Chico Crypto spoke about it. I'm buying it. So you go and you buy it because you just want your bags to pump, right? And they pump a little bit and then they dump because you don't know what you're doing. You buy when there's blood in the streets. You buy quality when there's blood in the streets. You make money. You buy into weakness, you sell into strength, and you rinse and you repeat, and you rinse and you repeat. Mm-hmm. Mm-hmm. So, with that being said, though, guys, we're coming up on an hour and 24 minutes. I don't like to make these streams run too long because I know for a fact that most people are not going to watch them all the way through. So, I want to leave today's video in closing like this. what we're witnessing happen in the market is, number one, the macro environment is just causing a sell-off across the board. Crypto is correlated to the stock market. If stocks are selling off, crypto's going to sell off. We know that. What happened with Luna, we're going to see happen with a lot of other DeFi protocols where they're going to get tested, and we're going to see if they're truly, truly battle-tested cryptocurrencies. I'm personally not panicking. I'm looking to raise as much cash as possible to take advantage of some of these bottom of the barrel prices and buy in. This is where millionaires and billionaires are made, buying into this weakness. And you're going to look back 2 years from now, 3 years from now, 5 years from now, and you're going to think yourself when you've made 10, 15, 20 times on your money by investing in quality projects that actually have real utility, real teams, and real infrastructure that they're building out. I would not be panicking. If you're someone that's looking for a safe space to learn, to educate yourself, I created my Tech Academy for that very reason. We cover all things crypto: how to buy, how to sell, how to store your crypto, how to build out a portfolio. We talk to you about NFTs. We teach you about different DeFi protocols, how to safely move your assets around, and just how to evaluate things. If you're someone that's interested in that, we have a free 3-day trial that we put together. Absolutely try it out for free. If you like it, you stick around. If you don't, as long as you cancel within 3 days, you'll be fine. We also do have a lifetime membership. I put together a special training for lifetime members where I teach you guys how to convert your crypto into other assets and convert those assets into cash without having to go through centralized exchanges. Next month's masterclass is going to be on how to scan the blockchain properly and be able to track whale wallets, so you can do things similar to what this attacker was able to do to really see when particular protocols are over leveraged, or treasuries are trying to move money around, or whale wallets are just moving money around to dump or to pump a particular protocol or the market. Also, I'm doing a $5,000 crypto giveaway. All you have to do is text the word YouTube to the number below in the description for you to learn more about the giveaway. Also, by you texting the word YouTube, you will be on my text message list, so I'll be able to notify you when I'm going live and when I will be doing the giveaway. Also, my Instagram is in the description below as well. If you are interested in, following me and asking more questions, if you're interested in investing with me, getting more information or details, you can shoot me a DM on Instagram, or you can email me at info@mytechacademy.io. Be very careful. There's a lot of people that are impersonating me. There are a lot of people who are going, I would never message you first. I don't want your social security number or your credit card information or anything like that. Be very careful. You should not be giving money to random strangers on the internet. Before you and I do any business, we're going to hop on a Zoom call and go over the terms and everything. So please be mindful of that so that you do not get scammed out of your money. There's a lot of people running around here conducting scams. That being said, guys, have a blessed and beautiful evening. Be safe out here in these crypto streets. Do not panic. Have a shopping list. Know what you own and why you own it.